And we're live now, I believe.
Seems to be the case.
Excellent. If there's anybody out there who can hear, if you can, just so we know it's working, if you could put a little comment in to the effect that you can hear us, that would be great.
And the Q&A is up at the top right of the screen, I do believe.
Mm-hmm. Do not see any comments yet.
So hoping to test and have someone confirm that they can hear us and they can see a Baker Tilly slide on their screen. And I know there can be a slight lag in some cases, but shouldn't be too extreme. So if anyone out there on the call could ping us something in the Q&A up at the top right of your screen to let us know that you can hear us, that would be great. We'll just wait for a second and then we'll carry on. I think, Greg, maybe give it another 10 seconds or so and then
Sure.
we'll carry on. The good news is we've got lots and lots of questions and lots of answers. And so we'll assume that you can hear us regardless of whether you've pinged us or not. Anything there yet, Dan?
Oh, sorry, I was on mute. Yes, I think we have a comment now saying that they can hear us.
Wonderful. Okay, off we go then. So thanks for joining and welcome to our webinar on the COVID-19 relief measures. I'll start off with some introductions. My name of our three presenters today, my name is Greg Leslie. I am a tax partner at Baker Tilly, and I will be presenting with Lori Messenger. She's a manager in our tax group, and she's also been our point person on the COVID relief measures. And Dan Nordquist is joining us also. He's a senior manager in our BT Advantage Accounting Services group. So just by way of a quick intro and a bit of a disclaimer here as well. A lot of what you will be hearing today and what we'll be discussing is based on what we've heard from press conferences, government backgrounders, and news releases. Some of this measures have not yet been legislated. That's something that can make accountants a little bit uptight. We'd like to see the legislation in order to really know what the actual rules are. But that's not out on a lot of these measures yet, particularly the wage subsidies. We're expecting that hopefully as soon as this week. We are doing this webinar in kind of a Q&A format without the legislation yet. We do find ourselves with a few Qs for which there are no As. We'll do our best to answer all the questions as they come in. When we know the facts, we'll tell you the facts. When we're taking a guess, we'll tell you we're taking a guess. And we'll do our best to get meaningful answers. We are putting a lot of, excuse me, a lot of faith in that the eventual legislation is going to answer a lot of these questions. We are trying to take a small business, owner-managed business focus to this webinar as well. That's a little challenging where sometimes, you know, legislation doesn't encompass every possible scenario that an owner-manager could be facing in their small business. So we'll just have to wait and see what the laws look like when they come. So without any further ado, let's get right into the meat and potatoes of the webinar. I'll start off with the deadline extensions that have been announced. We'll start with these because they're kind of probably the most cut and dry of the new measures. There are a few complicating factors, but for the most part, it's fairly understandable. So I'll start with individuals and personal tax returns. Normally, your due date for your personal return for most taxpayers is April 30th. That due date, the filing due date for actually sending in your return, has now been extended to June 1st. So we all have an extra month and a day to actually file our returns. That's the actual filing of the returns. The paying of your taxes is a different story. When you file that return, if you owe taxes on that return, you don't actually have to remit your payment until September 1st, 2020. Now, for employees who are on a salary through payroll, taxes are being withheld at source all year long. Usually employees like that don't have to pay a whole lot on filing. So this extension might not be of a huge benefit to someone in that boat. For other people who are self-employed or business owners who receive dividends from their companies, it's more likely that you're going to owe something significant at the end of the year. So the deferral of payment until September 1st is a little bit more meaningful for that group of taxpayers. Now, some of those people might have been responsible and paid up their installments all year long, which would reduce what they owe at the end of the year. For those people, the relief doesn't really do a heck of a lot of good. You're kind of penalized for being responsible all year long. And the whole deferral idea basically means that there's no interest and penalties on any taxes that you owe and that go unpaid until September 1st. That's the appeal. So that's the skinny on individuals. For corporations, for businesses that are operated through a corporate structure, again, there's a distinction here between the due date for filing of your actual return, your corporate return, and the balance due date for when you must pay what you owe. So the filing due date first. If the filing due date of your return is between March 18th and June 1st, you can now hold off on filing it until June 1st. Ordinarily, corporations have to file a return within 6 months of their year end. So if your corporation has a December 31st year end, your return is ordinarily due on June 30th. So that date has not changed. It's still due on June 30th. But for corporations whose year ends were earlier in the fall of 2019, these are the taxpayers for which some extra time might be granted. So for instance, take a corporation with an October 31st year end. Ordinarily, you'd have to file that return on April 30th, 6 months later. But because April 30th is after March 18th, your deadline is now extended until the 1st of June. So again, that's the filing deadline. Now, for actually paying your taxes, it's a little bit more complicated. And the rules work like this. Even though you don't need to file a corporate return for 6 months after year end, if you owe any taxes on that return, your balance due date is technically earlier than that. Companies can have a balance due date that's 2 months or 3 months after its year end. So that's before the 6-month filing due date. Under the relief measures, any corporation with an ordinary balance due date that falls on or after March 18th can now defer the payment until September 1st. So you really need to know what the ordinary balance due date is of your return. As mentioned, it may be either 2 or 3 months after year end. For most small business corporations, your balance due date is 3 months after year end. So a small business, meaning one that's eligible for the small business deduction on their income, those filers have 3 month after year end balance due dates.
Greg,
So,
can we just?
Sure.
We just got a note from IT that we're not people aren't able to get in to the meeting.
Okay. Okay, we're back in business, I think.
Yep.
All right. Sorry for that. So I was speaking about the balance due date for corporate returns. Most small business companies have a balance due date that's 3 months after year end, businesses that are eligible for the small business deduction. So if your company is a small business and has a December 31st year end, your normal balance due date is March 31st. Because March 31st is after March 18th, you can defer payment of tax until September 1st. Other big businesses and investment corporations, the balance due date is usually 2 months after year end. So if a company like that has a December 31st year end, your normal balance due date is February 29th. February 29th is before March 18th, so you don't get the deferral for that type of business. So from that kind of basic example, it's apparent that a company with a fiscal year end that's before December 31st won't really qualify for the deferral on taxes that are already due. The deferral is really available for companies with fiscal year ends of December 31st and later on. Won't spend too much time talking about other types of returns, but there are extensions available for trust returns and certain partnership returns, filing deferrals of 1 month. You can refer to our guide for more details on that. Information on how to get our guide will follow. A quick word on GST as well. Your GST returns, the filing of the returns, there's no extension. Those are due on the normal filing due dates. However, any related GST payments that become owing after March 27th can now be deferred until June 30th. A couple of quick questions on those extended deadlines. First question is, we know we can defer payment of balance owing from 2019, but what about installment requirements? Are they also deferred? The answer to that is yes. So an installment would be a prepayment of your tax for 2020. You can defer paying those installments. Any installments that became owing after March 18th, you can now defer paying them until September 1st. Again, what that means is interest and penalties will not accrue until September 1st. The catch, of course, is when September 1st rolls around, you got to catch up on those installments that you missed, unless they decide to extend that deadline. The second question was about GST returns. I think I kind of covered that. Again, you have to file the returns on time, but there's a deferral available to when you actually have to pay for the GST that's owing on those returns. The filing of those returns, just as sort of a helpful hint, we're going to talk about the wage subsidy next. That is tied to your revenue numbers. So if you're applying for that wage subsidy, keep in mind that you're revealing your revenue numbers on your GST returns. So you'd certainly want to make sure that the information you're giving CRA on your GST returns for your revenue corresponds with the information you're giving them on the wage subsidy application. So with that, let's start talking about the wage subsidy. Lori, I'll turn it over to you.
Thanks, Greg. That was a really good summary of all of those deadlines. I find it difficult to keep them straight sometimes. So the topic on everybody's mind today, the majority of questions that we received in advance, the questions that are still rolling in live, and I can see my email popping up even now with new ones, is the emergency wage subsidy, the 75%. Sadly, it's the one that is the most uncertain in terms of information available. We don't have legislation yet. We don't have an application yet. We're basing information on the backgrounder that came out last week. But of course, that is subject to change. And so, disclaimer again, everything that we discuss during the presentation today is definitely subject to change, and we'll keep you posted on our website and as facts come out in legislation over the next week or so. So what we've done is we've kind of put together the questions that people have asked in advance about the wage subsidy, and and by the way, we have split the event up into topics, as you can tell from the slides so far, just trying to kind of contain the different topics in different minutes within the presentation. But please feel free to submit your questions on everything or keep them specific to what you see on the screen. The emergency wage subsidy dips into all of the other programs in terms of our desperate need to know how it interacts with the other programs anyhow. So you will see we are touching on those other topics now as we go. So, first question, does the company have to be a CCPC in order to qualify? Anybody want to throw a comment out on that?
First of all, CCPC is exactly what it sounds like. It's a private corporation, meaning it's not a public corporation, and its controlling shareholders are Canadian residents. So most, small businesses around here would be CCPCs. But the answer is there's no restriction on the type of company you are, or the size of company, or who owns you, in order to qualify.
Yeah, and I think that question came from what we at one point were saying was the predecessor to the 75% wage subsidy, which was the 10% temporary wage subsidy. Turns out that's still on the table as well. We're going to get to that, but there are some restrictions there. So I think that's, where this question may be coming from. And great question. Is this subsidy actually for any size business? Well, so far, consistent with what Trudeau announced last week, it's for all businesses, big and small. So we're not seeing size of the business as a restriction at this point. Yeah. And when can we apply? Well, we don't know. We hear sometime within 3 to 6 weeks, again, waiting for the legislation first. And the application process will happen through CRA My Business account. So if you're not already signed up for that, you should definitely get moving, because that does take some time to process and does require some information being sent out to you by mail.
Yeah, and that 3 to 6 weeks, that was the number they gave us when this was first introduced. So I think we could safely say that the clock has already started on that 3 to 6 weeks. So hopefully, as of today's date, it's a little shorter than that.
Agree. Let's cross our fingers on that, Greg. If we hire back our laid off staff, what's going to happen if they've already been receiving EI benefits, or they're waiting for them, or they've received or will receive the $2,000 emergency response benefit? Well, what happens is you can't get both at the same time. And so for the 75% wage subsidy, you employees who've actually received CERB during the same 4-week period are not also going to be eligible for your company to get the wage subsidy. Now, EI benefits, different story. If you're paying your people, presumably you've hired them back or brought them back on so that you can pay them wages, which will impact their EI benefits as an individual. And am I correct in assuming it's not possible to apply for this subsidy until April 11th when the first period ends? I mean, based on the estimated 3 to 6 weeks, I think that's a pretty safe assumption. I can't imagine before the end of that period that you'd be able to apply for a subsidy for that specific period. So
and we're getting pretty close to April 11th, and we don't have the portal available yet. So it's safe to say that it's going to be after April 11th.
Yeah, it's going to be at the very earliest, and likely not even then.
So remember, one of the things that's holding us here is there needs to be legislation finalized for this subsidy, which means the House has to be sitting again. And I think we were told yesterday that that's happening soon, perhaps in the next few days. But aside from whatever issues there are in setting it up on the internet, they need to have this thing legislated and passed before they can go live with it.
I agree. So we think our business is going to qualify. Revenues are down more than 30%. My wife and I own the business. 2 of our adult children work there full time. We're all salaried employees. We're making payroll remittances. Will the owner's wages and those of the family members qualify for this subsidy as well? The answer is yes. We're happy to say yes, but there will be a special calculation needed to calculate the wage subsidy for the non-arm's length employees. It'll be based on pre-crisis wages, which we don't really know what that means yet. Again, waiting on legislation, but it will be capped, and it'll be capped based on pre-crisis wages, or $847, and of course subject to change.
Yeah, so the idea here is there's an additional restriction on your eligibility for the maximum amount of $847 a week when you're paying yourself or when you're paying family members. And it's basically just an anti-abuse thing to keep you from giving yourself a raise during the crisis in order to qualify for more of the subsidy, or for maybe adding additional family members on payroll that weren't on payroll before in order to maximize the benefit from the subsidy. So basically, your wage that's eligible for the subsidy is supposed to be based on what your wage was before the crisis emerged.
So Greg, here's a question that we've been asked. What about if I backdate some payroll to February because I have a payroll account and make my remittance late and then try to qualify? What are your thoughts on that?
Well, one thing that we've heard, from the first day this was announced, that the government's not going to have a very high level of tolerance for anything that smacks of abuse or of taking advantage of the system. So really, I think that the answer is no monkey business. I don't think we've really been told yet what the measures would be for people who are seen to abuse or take advantage of the system, but they certainly have that on their radar.
Definitely. I saw on one of the websites they're, talking of creating new offenses that they can charge people with and jail time and all kinds of frightening things. So no monkey business, folks. Be careful. What if I can't top up the other 25% that's not going to be covered? Well, we know that Trudeau announced last week, if you've got the means to pay it, you should make every effort to do so. His other comment was you should make every effort to top up these wages and every effort to hire back those workers who've been laid off in the past 2 weeks. The money's intended for the workers, and so do your very best. And when you apply, we fully expect that you're going to have to attest to having made every effort. So again, no monkey business there.
And the other thing is, correct me if I misspeak on this one, guys, but the way the subsidy works is you have to pay your employees first. And then afterwards, you apply for the subsidy to recover the government 75% amount from the amount you already paid them. So for a lot of people, it's almost like you have to pay them the full wage first to get the 75% later. So in some cases, you'll be compelled to really pay that other 25%.
And we have our first question here too from the live event, and it's in regards to this program. So the question is, if we rehire our laid off staff, do these staff members have to be actually working to qualify for the program?
Now that is a good question. Based on the spirit of the thing and the intent, my take on that would be they don't necessarily have to be working. They have to be being paid. What do you think, Greg?
I believe that's the case because you hear about this a lot for, say, restaurant workers and hair salon workers who simply cannot get back to work. They're not allowed. So I think that was the whole intent and idea of it. And there's nothing certainly in the background that says you actually have to show up, particularly if it's dangerous to do so, and do an honest day work in order to qualify for this.
Makes sense. So I understand you need to demonstrate a 30% drop in revenue for specific date ranges. The first is March 15th to April 11th, but our business does its billing at month end, March 1st to 31st. How much flexibility is permitted on calculating the revenue? Well, good news on that one. The revenue comparison is actually for the calendar months. So you would actually be comparing March 2020 to March 2019 and so on. The periods are actually the eligibility periods, but the comparison is month over month. And, disclaimer coming back at you again, it's all subject to change once we see the legislation, but the way we understand it now is that you'll do a month over month comparison.
Yeah, that's great, because I think that was one of the questions. There was a particular business that had a very difficult time to determine if it was cut off in the middle of a month or the 11th, as the case may be in this instance.
So my business is closed. I'll still be receiving payments from my customers based on invoices that I sent out before March 15, which means I won't have a 30% decline in revenues for the first period. Does this mean I won't qualify? Well, the test is actually based on gross revenue from business carried on in Canada from arm's length sources, and it's for calendar months using your normal accounting method. And so most of our clients would be using an accrual basis accounting and recording revenue when they bill. So payments coming in later are really just a payment of accounts receivable, not an actual revenue. It depends on your the method of accounting that you're using. You should talk to your advisors and accountants and make sure that you understand the accounting method that is being used for your business, and don't change it. Keep using the same accounting method.
I might add also that revenue here means normal revenue and gross revenue. You shouldn't be counting, say, capital gains or extraordinary items. We shouldn't be counting revenue from non-arm's length sources. So if your company is doing business with other companies that are owned by yourself or by close family members, you need to back this revenue out of the math. And the revenue is gross revenue. It's not profit, not net income, or not margin. It's your top line gross revenue. It's probably also not acceptable to net bad debts off of that revenue, since bad debts are usually accounted for as an expense and not a contra to revenue. So gross revenue, calculate it and account for as normal in the same way you did a year ago.
So Greg, Dan, I've got two questions, and I may forget one, but one of the questions is, what if you are a sole proprietor or a company who is in a particular business, it could be any business, and a part of your maybe revenue, maybe offset of cost of sales is amounts received because you have promoted another business or provided a code to another business or to your clients so that they can interact somehow with a third party, and then you get some kind of kickback, either as a rebate on your purchases or a commission or a royalty. How are we going to treat that when it comes to revenue? I'm going to leave it with you two accountants to try to tackle that, if that's okay.
Well, I'd say the simple answer is, as long as you're doing it the same way as you did last March, April, and May, that's the standard.
Good point. I like this answer.
Yeah, it's the consistency, not gaming the system.
Yeah.
That Greg mentioned earlier. So
yeah, I mean, frankly, there might be some small business out there who are using accounting methodologies that maybe aren't quite up to standard. But I think it's more important that even if you're not quite up to standard, you keep doing the same thing as you were doing last year and don't change your standards now in order to kind of game the system. Even if, your accountant might sort of tut you for the way you've been accounting for your revenue up to this point.
And what about the sole proprietor, like the self-employed person who's just reporting income on their personal tax return, and so all they've reported over the years is whatever amounts they've actually received?
Yeah, so I mean, a smaller business might be using a cash basis of accounting instead of an accrual basis of accounting. Again, is that really up to standard? Perhaps not, but really, it should come out in the wash as long as you continue using the same method as you did last year.
Not to say that there aren't any Income Tax Act issues with using cash basis, but basically for the purpose of the subsidy, keep things consistent.
Yeah, now's not the time to worry about that. Yeah.
Yeah, clearly, if our doors are closed and we can't pay our employees, there's bigger things to worry about today. Yeah. I've forgotten the other question. I'm sure it will come back to me, or someone will post it in the Q&A. So how can taxpayers support revenue calculations? So what are we going to do, Dan, from a bookkeeping perspective, to try to figure out what that revenue looks like?
In terms of all calculations, I would say, looking at, again, prior years as an indication of what that might have looked like. What you want to make sure is that you're reporting something, because the submissions are still due. So I would still file, and then you can amend at a later stage, but you do need to get something in. So if you could not get in to get your documents, that's what I would recommend.
So figure out some way to come up with your revenue calculations and the historical information. Some people are suggesting spreadsheets. I think that we might see a free template coming down the pipes that people can use to help, and we'll certainly keep you posted as that becomes available. But yeah, it's tricky. I talked to one person who is a bookkeeper for a restaurant who, the restaurant has a computer in its office and it's not online. And the records are almost all on paper, and the historical records are all also at the restaurant. And trying to figure out if we should be leaving our home to go to the office to do the math, or is there anything else that we can do? And I would say this is a situation where, putting safety first might be the answer, but contact your external accountant and see if there's any information that they can provide back to you electronically. I don't know what I would do. I'm really glad that I don't have to make that kind of decision personally.
Yeah, in case there is a backup somewhere that's off-site, then that would obviously be ideal.
And just to be clear, when you actually are able to start applying for the wage subsidy, we don't think you're going to have to provide too much in terms of financial support. It sounds like you're going to just have to attest to the fact that you're experiencing a 30% decline in sales. But as far as being able to support that later on, that could be an audit issue if these claims are audited afterwards.
Yeah, so basically if you are, if you know that you've got a 30% decline in revenue with all of those other, disclaimers, extraordinary amounts or capital gains, things like that, then, you're attesting to the fact that you have the 30% decline, but you are, potentially subject to audit later and will need to have the documentation ready at that time for sure.
And
What
we
are we
do have
gonna
a
do?
second question here as well.
Okay,
We
sure.
have a minute. It states, if we're changing the course of our business and we want to hire new staff, are they eligible for the wage subsidy?
So happy to report that the answer to that is yes. New employees will be eligible. Now, what that means when, if your new employees are also a part of a new business where you might not have history on the revenue, we don't exactly know what that means, but this subsidy is based on a revenue test, not an employee having been there long term. So the key will be, if you have new employees, are you also in a position where you are a new business and you might not have historical information, or your historical information might be from your first year in business when you had no revenues, and so showing a 30% decline might not make sense. But it sounds as if there will be solutions to this once we see the legislation and the application. We just don't know what that reasonable alternative will look like.
Yeah, there's been references to being able to use a reasonable benchmark with which to judge your current revenues against. Again, that's just a word on a page in a government background, and right now we really don't know what that might look like.
And every time I've personally tried to guess, I've been wrong. So, speculating might not be a great idea. We do the best we can, but it can all change overnight, as we've seen.
Absolutely.
So what about MPOs, charities that don't fit the normal kind of revenue streams? Well, we have been told that MPOs and charities can qualify and that there will be more information provided. And again, that's kind of subject to waiting on that legislation and the application to see what it looks like. So this has been one of my favorite questions happening daily over the last week. What if I just don't bill my customers? What if I am still serving my customers, but I just don't bill them for the next 3 months? And I would say that lands you solidly into the realm of monkey business.
And also, just because you're not billing customers doesn't mean you're not recognizing and recording revenue either. For instance, in a professional services firm like our accounting firm, we recognize revenue and record revenue as we perform work. The billing is just a process at the end of it for producing invoices. But as tasks get completed throughout that process, the revenue keeps building up. So just billing doesn't affect that.
And key is keep using your normal accounting method. And so how have you been, but I think the monkey business is, well, I'm going to stop using my normal accounting method. If billing is the trigger for recognizing revenue, I'll just stop billing.
Yeah,
well, that's
work.
not your that's not your normal accounting method. And what if I allow my customers to just defer paying me for 3 months because I'm trying to be a nice guy and I know they're in a bad spot too? Well, again, normal accounting method might not result in payments from customers being revenue. So you need to check with your advisors and keep doing things the same way.
Right. If you're using accrual accounting, that doesn't work. That's just receiving your accounts receivable. And on both of those points, I think as general advice during this crisis that we're in, cash is king. So I'd bill if you can bill, and I'd collect if you can collect, and then let the rest of the chips fall where they may. Those are really going to be your priorities, to bill and collect.
Yeah, and for a lot of service firms, that's going to be key to survival, I think.
Absolutely.
All of these nice measures notwithstanding. If I hire everyone back, I'll have to use the cash I have to pay them, and then I'll have to wait for the 75% subsidy. What if I do the application and I find out that I don't qualify for the 30%? What if my revenues end up being 28%? I'd say there's a risk there. Clearly there's a risk there, because like Greg said earlier, you're going to have to pay the people before you can get the subsidy. So you need to get your ducks in a row and try to get those revenue comparisons done, and using your normal accounting method, and get help if you need to. So what about the emergency wage subsidy in combination with other programs like the temporary wage subsidy, the 10%, or the CERB, $2,000 a month for the folks who aren't working? Well, on the temporary wage subsidy front, good news, that one's still around. We'll talk about it a little bit more in the next section. And you can be eligible for both. You can't double dip though, so anything you get from the 10% subsidy is going to reduce the emergency wage subsidy. And then on the CERB front, the $2,000 a month that the employees might be eligible for if they've met all of the criteria, which is another section we'll get to soon, you can't double dip there either. So if you've got people who have received CERB during one of the 4-week periods, you can't also pay them and get the 75% subsidy for the same period. So if I have to lay off all my employees, I've shut my company down, is there any chance that my company is going to be entitled to getting the 75% wage subsidy faster so I can get opened back up sooner? I don't think that's going to happen. We don't have all the information yet, but I think the application process is going to roll out however it rolls out. And I don't know if that means first come, first served. I know CRA staff are getting diverted to help, but I don't think there's going to be any priority given to any situations as far as I can tell.
Hopefully it'll be heavily automated, so everybody will have a relatively quick turnaround time. Remains to be seen, though.
Yeah.
I have another question here as well. The question is, they laid off all their staff on March 15th, giving them each an ROE, and they've since applied for EI, and they want to rehire the staff to be able to compensate them the 75%. But my concern is the overlap of the EI, CRB, and the 75% subsidy. What if they don't get off EI in time and end up paying their 75% wage? Could I risk not getting reimbursed the 75%? How do I confirm enough time has elapsed since the CERB and EI to paying them the 75%? So I know that's a
That's a
long-winded
heck
question.
of a question. But it's a great question. So speculating, could be wrong, but I'm going to throw my opinion at this question. Here's what I think. The whole intent of this thing is to get people off EI, or have them not waiting to get cash into their hands, to get them back on payroll and relieve a little bit of burden from Service Canada's EI program. I think that it's safe to say that if you hire the people back, you begin to pay them a wage. We know that EI has a long-standing program to figure out the math on that. So if they get paid and you get the wage subsidy, that's an employer side mechanism. And then on the individual side, the EI program will take care of any overpayments to EI that they might receive. That's my opinion.
I think that's right. I think maybe the bigger challenge might be on the CERB, on the $2,000 benefit, where as an employer, you really don't have a lot of control on whether individual employees go in and apply for that CERB, yet they're not supposed to get the wage subsidy. You're not supposed to get the wage subsidy for a period that includes a CERB entitlement. So it might require a little bit of communication with employees and asking them, look, did you get that $2,000 a month for this period? Maybe don't apply for it the next period because I'm going to put you back on wage.
And that's going to be tricky.
Sorry.
I was going to say that's going to be really tricky because if you think about it, you've got people who are off work now due to COVID-19 who qualify for CERB, who are applying, who aren't or have no obligation to communicate or to tell their employer that they're getting CERB. That's, you know, that's an individual program, and then go back to work, and the employer, you know, without asking the questions, puts themselves at risk for a later audit on things where they'd be required to pay back the subsidy.
Yeah,
it's a bit terrifying, but it definitely something.
It's worth asking your employees if they've already applied for the CERB. Anyhow, we're coming back to the CERB after this section. Anyhow, so we'll.
That's right.
We'll address
Go
that.
ahead. Yeah, go ahead, Dan.
Which is there's three questions. So once we come to that, I'll there's some questions on that. So we'll tackle those. So there's three in the queue once we.
Okay, very good. CERB is coming, folks. Stay tuned. Just hang on. 30% drop in revenue cutoff for the wage subsidy, or is it possible there might be a sliding scale? If, for example, if you're at 28.46%, my God, we hope so.
I mean, so far, no. So far, that 30% is a line in the sand, so to speak.
Yeah.
Where you might see some relief, again, speculating, is if you thought you were 30%, got the wage subsidy, turned out you were only 29%. Maybe as far as repayment or penalties or whatever the abuse punishment is, maybe there's be some wiggle room in that where you're close to the 30%, but not quite there.
Yeah, I guess, and I hate to keep throwing those disclaimers around, but we don't know what we don't know, and everything is subject to change and can change. You know, some days it feels like hourly. So stay tuned though, because we're trying to stay on top of it as fast as humanly possible and keep you informed through our website. So I love this question, and I do not know the answer. If a company has HST or other amounts in arrears with CRA, will they still qualify for the emergency wage subsidy or other programs?
There's nothing explicit that says that's a problem.
And some of the programs are, and we also know that not all of these programs are CRA. A lot of them are Service Canada, and so whether or not there's any way that the arrears on one could impact another, we don't know. I think when we see the application, so take CERB for example, people were applying for it, already this week, and I did not get one message from anyone anywhere to say I couldn't apply because I've got a balance owing. So yeah, we don't know until we see the applications, but yeah, who knows? Hopefully not. I mean, the whole point of emergency measures is to help you through an emergency. So I guess we'll see. Can all employees be included in the emergency wage subsidy, or is it just those who could potentially be laid off? What about executive level staff like CEOs or executive directors?
So it's all employees are eligible. Of course, your executive level staff probably make a lot more than the $847 a week maximum benefit. But if they're on payroll, they qualify.
So basically all employees, regardless of position, salary, or potential for being laid off. And can we get the wage subsidy for a new business that doesn't have historical salaries? Or what if we have 5 employees on full salary separate from the shareholders? The answer is yes. Again, it's a revenue test. And so if you meet the revenue test, decline of 30% or more in your revenues this year over last year, or based on some other reasonable benchmark as yet to be seen, then yes, new business should be able to use the wage subsidy program. And of course, there's lots of questions that we don't really have any answers to yet. So we wanted to throw them out there. I'm not sure if we're going to comment on them at all today, but just a few things that aren't entirely clear from the background or in the information we have available. Difference between active business revenue and business revenue. Income deferrals versus loss of income. What if last year was a bad year and this year you've shown growth? I love that question, and I wish I could figure it out. Hopefully there's going to be some reasonable benchmark that can be used in that case as well. Dan, Greg, do either of you want to comment on those questions that we don't know the answers to yet?
I think in the interest of time, maybe we'll just keep moving along to what we do know.
We're going to come back to
Yep.
those someday, though.
Yeah.
We will. Yeah.
We lay off our full-time staff. She's going to qualify for EI and in addition qualify for CERB. Is her total income going to be the same as if she stayed employed and paid usual taxes and other deductions? That is, from an employee perspective, exactly what employees are trying to figure out. What should I do? Should I, stop work due to COVID-19 if I kind of fit one of the reasons why? Should I keep working? Should I be laying off employees so that they can apply for EI? And it's very, I think it's very fact specific. I think every situation is different, and you certainly your accountant or advisors could run scenarios based on whatever different things you can think of, but just trying to break it down. If you assume that someone's been receiving salary so far this year, then that's, based on the $48,000 example that was provided to us in the question, that's about $4,000 a month. On CERB, they're going to get, assuming they qualify and reapply each month, they're going to get $2,000 a month. Assuming the basic EI benefits, nothing else, they'd be getting $2,200 a month. And if they qualify for the wage subsidy, then they might get their full salary, but if their employer has made every reasonable effort and can't top up the other 25%, well, then they're only going to be getting $3,000 a month. So these are, tough situations to be faced with, but I think every situation is different, and there's so many things other than, we're talking about dollars which people need desperately, but there are so many other things to consider. I know one of my children had to make the decision of stopping work, even though they are in an essential service, because their children's daycare closed and they had no other option for childcare. So,
Right.
Sometimes you don't get the choice.
Good point. There is another question, and it is related to the subsidy.
Mm-hmm.
And it's this one is a little quicker than the other one. How is the wage subsidy paid back? So I'm assuming like tax wise.
So you you do your payroll, you pay your employees, and then you will apply on the portal for the wage subsidy. You'll get your money from CRA either through direct deposit if you're set up for direct deposit, hopefully you are, or a check in the mail. I think maybe that's the question was being asked, was how they get their money. After you apply, it's through direct deposit or a check in the mail. The subsidy you receive is going to be considered taxable income to the company. So at the end of the year, you'll have to pay tax on the total amount of the subsidy that you did get. However, on the assumption that you actually used that money to fund wages that you otherwise wouldn't have paid, you'll also get a deduction for the wages that you actually pay. So the end result should theoretically at least be a wash as far as taxes go.
And then I agree with that, Greg. And then just, at the end of that, to be clear, you don't have to pay this back to CRA. This isn't a loan program, it's a subsidy program, unless you get audited down the road and it's determined that you've got errors in your calculations or you've been up to some kind of monkey business, as Greg said.
Right, good point.
And I have one more question, and I think I missed it earlier, and it's in regards to somebody that has a restaurant. It states, I'm a restaurant owner. We had to let most staff go, and I had to start working in the restaurant myself for long hours to stay open before the 75% was announced. We couldn't get some of our key staff to come back after that 75% was announced because of the $2,000 a month payment and safety concerns. Do I qualify to pay myself as part of the wage subsidy? So as the owner.
So the owner would be restricted based on their pre-crisis. There's the additional restriction for owner managers and their family based on their pre-crisis remuneration. So you'd have to look at what you were making before all this started, which would impose a restriction on whether you're eligible or not. Again, the idea is they're trying to keep people from gaming the system by either increasing their personal payroll or adding other family members on payroll just to top up on the available subsidy.
And I had a different question that's very similar, which was my spouse works for our family-owned business, and there is work to be done, but at a reduced capacity. So even though we're talking a lot about a special calculation for non-arm's length individuals that will restrict the wage subsidy based on pre-crisis income, if the situation that you're in is that you're actually going to be reducing non-arm's length persons' salaries, well then it's, pre-crisis remuneration is one of the parts of that special calculation, but amounts actually paid is another. And so if you would have maxed out on the pre-crisis earnings, but now you've cut their salary in half, you're going to be restricted based on that as well. So three-part question. It's a 30% decrease in revenue or income. That is revenue, gross revenue, with some exceptions that we mentioned earlier. Assume you'd apply the first day of the following month, but how do I apply? Do I need to apply every month? So you have to apply every month. It's not the first day of the month. The periods have been defined. March 15th to April 11th, April 12th to May 9th, May 10th to June 6th. And of course, stay tuned because we still need to see the legislation and the application form and see if anything changes as time goes on. And final part of this question, are they asking for us to provide proof besides the 30% decrease that your loss was caused by COVID-19? You have to attest to the decline in revenue. There's going to be some kind of box on the application where you've checkmarked the box to say, I have a 30% decrease in revenue. You have to have, maintain supporting documentation, although you don't have to send it in, as far as we know. But I haven't seen anything that says that your decline has to be caused by COVID-19. Dan, Greg, anything you've seen there?
No, and it's kind of could be fortunate if you do have a decline that's based on other factors. It would appear that you still qualify for the subsidy. You don't have to attest to it being based to the current crisis. If you're just slowing down, you could still qualify for the subsidy. At this point, we said we'd give an hour for this. We're already almost to an hour, but we have a lot left to cover. We'll go long. We'll keep talking as long as you keep listening. The wage subsidy was probably our biggest topic, so we should be able to move through the rest of our topics a little quicker.
Yeah, and there are some questions on the SERB that are kind of in the queue. So
so we'll try. We'll do our best to get them answered.
Perfect.
And I think thanks, Greg, for dropping that comment in there. So for those of you who do have to sign off at 11 o'clock, sorry, not sorry that we're going to allow ourselves to go long, but it is going to be recorded, so you can play back anything that you've missed later. And if you do have questions, get them in the queue because we will make every attempt to answer them before we sign off. So if you'll permit us to go a little bit long, we'll do our best to get all of your questions answered on the call, and you can play it back later once we post the recording. So next section, temporary wage subsidy 10%. We actually only got one question about this, perhaps because people were assuming that it was no longer on the table with the new one. But the question is, can you provide details on this temporary wage subsidy? Greg, what are your thoughts there?
So this was the initial wage subsidy. It's not as rich as the 75% one. But it's something, if you're a company that doesn't qualify for the 75% wage subsidy, perhaps because your revenue didn't decrease enough, you can still qualify for this one. The eligible employers are pretty much the same as the ones we discussed before, except it's a little bit more small business focused. If you're a corporate employer, in this one, you have to be a Canadian-controlled private corporation and a small business to boot, which means you qualify also for the small business deduction. Most of you who do qualify for the small business deduction are probably acutely aware of that. So this one's a little bit more focused on small businesses. Maybe we'll go to the next slide there, Lori.
So there are some limits on how much you can get. Maximum $13.75 per employee and $25,000 per employer
in total.
And go ahead, Greg.
So this one, you don't have to apply for it. You just automatically calculate it yourself, and you will automatically get it when you do your payroll with your remittance to CRA. You figure out manually how much of the subsidy you're entitled to, and you take it off what you would ordinarily remit to CRA for your payroll at the end of the month. And you'll see there's a template link there where you can calculate the amount of your subsidy. That template's really good, so maybe we won't spend too much more time talking about how to calculate it as that template does our work for us.
Now, although we don't need to comment on how to calculate it, I'll tell you a little story if you'll permit me to do so. We've got a client who works with a payroll service provider, so a third-party payroll company, and they have got a lot of information available, especially the bigger ones, their own webinars going on, fact sheets and PDF Q&A sheets, and all kinds of really good information about how they're going to help you take care of this temporary wage subsidy. But some of their customer service folks you might chat with live online don't necessarily have all of the answers. And so if you're chatting with your customer service person with your payroll company, just be aware that if they're, they might not be hearing all of these announcements as fast as they come out. But behind the scenes, I think the payroll companies are doing a pretty good job considering how fast we've had to figure this out at getting ready for your next payroll remittance. So we're going to talk CERB now. So I'll jump into the questions that we got in advance, and then Dan, you can jump in wherever you feel appropriate with the extra questions that we've received on the call.
So this is just to be clear, this is the $2,000 per month benefit that people were able to start applying for yesterday.
Correct. So will individuals who've historically received dividends, biggest question, rather than salaries, are they going to be able to qualify? The answer is yes. We found out literally yesterday morning after the application went live that people who have been in receipt of dividends only could qualify. So that is really good news. You still have to meet all of the other criteria, but that may have been the best piece of news I've received all week.
Yeah, that was actually one of the questions that came up as well. So that's great.
So very applicable for owner managers and their family. Dividends count.
Dividends count. And you know what I really love about that is that it demonstrates to me, as often as I might criticize government and politicians, what that demonstrates to me is that they are listening to us and reacting to our concerns and to all of the different scenarios that are popping up that they might not have had a moment to think about before making announcements. So I think that's really, makes it look positive for the next round of legislation and changes. My wife does some work for the business and gets some dividends through a family trust. Is she going to qualify? Yes, dividends count as long as she meets all of the other criteria.
I do have another question, and sure. It's, I guess, related to taking a dividend, although this question here states, I deferred taking a salary dividend from my business in 2019 because I wanted to keep the money in the business and not knowing what the cash flow would be. So there's no personal income, and they lost money in the first year. So the question is, can they qualify for the $2,000 a month? And they've definitely lost 30%.
Yeah. So the test is, did you earn $5,000 in 2019 or in the prior 12 months, I believe? So if you didn't take anything in calendar 19, but did take some out in the first part of 2020, you could still qualify for the CERB.
And if you didn't take anything out at all since January 1st, 2019, then you might be out and not qualify for CERB.
Right.
So this is a question I've had a lot over the last couple of days and the weekend. My workers are discussing whether or not they'd be better off if they just left work and applied for CERB. What do I say? And just a reminder, the work stoppage has to be due to COVID-19, and you have to have 14 consecutive days with no work or no pay in one of the 4-week periods. And so people who are talking about walking off the job because they'd rather sit at home and play video games and get CERB, that's not really going to work. But there's very little that you can do to stop that from happening. It's not under the employer's control whether the employee applies for it or not.
One of the things that's hot off the presses is in the Prime Minister's news conference yesterday, he kind of addressed this issue, and he made some allusions to the fact that perhaps if someone was working 10 hours a week or less, they could still qualify for CERB, and some allusions to perhaps if someone was making less than $500, forgive me, I can't remember if that was $500 a month or a week, but they could still qualify for CERB. So as it stands right now, you are supposed to have stopped working, but yesterday it was signaled that there might be some changes made to that would permit you to work a little bit at least and still qualify for CERB. So they're trying to deal with this disincentive to actually show up to work.
Which is really important when you've got, companies that are in providing essential services. I know, like, we've talked to a lot of physiotherapists and other healthcare professionals who are, are providing emergency services, who are considering the ethics of whether or not they should be continuing to serve their patients when, when emergencies arise, but also, cutting themselves off from some of these kind of support.
Yeah.
If they do so. Or another example I've had recently was, in relation to, say, courier drivers or taxi drivers, or, people who are transporting the people that we need, healthcare workers, let's say, or the goods that we need, food, let's say, but trying to decide whether or not $2,000 a month is better than, being out there doing their job. So I was really happy to hear that yesterday as well. I stay tuned on that, and we'll see what that brings.
I have another question here as well, if we have time.
Sure.
So the question is, for EI and CERB, the employee needs to apply and report earnings as normal. So wouldn't that make them ineligible for either program?
So that's an interesting question, because two prongs on that. So for CERB, wait and see whether you can actually be working some hours and still qualify. Presumably the answer was no, but that is subject to change based on yesterday's announcement. And then for EI, if you're in receipt of EI benefits and you're working, you need to report that, and there are mechanisms in place to claw back on your EI if you're, I think it's half of every dollar you earn up to 90% of your normal salary. So, there are different mechanisms. There is a mechanism in place on the EI side. And another, maybe underlying question there is, how's that going to work if I'm getting EI and CERB? And from everything we hear, it sounds like Service Canada's already got that figured out. For people who've applied for EI after March 15th, they're automatically applied for CERB, and somehow they'll figure out the math once the EI benefits get or claims get processed. So
okay, yeah, that was another question too. They're asking, can our employees get CERB and EI if they were laid off?
So yeah, the answer to that is a clear yes. And how it's going to work out, if you get the CERB and you also get the EI, and now you've received too much money, in other words, more than $2,000 a month, what's going to happen? And I think, Service Canada's will figure that out. And I wouldn't claim to be an expert on how they're going to do that, but I think there are mechanisms in place to handle that. So what if I earn income in my business and I don't take it out? Can I still qualify? Well, when you apply for CERB, you're attesting to all of the questions that they ask you, including 14 consecutive days, no work, no pay. So I think paying yourself later might be a little bit of monkey business. And like Greg mentioned, we might see some changes that will allow you to work a little bit. Because I think of, the small business owner who trying to figure out ways for their company to survive. Clearly they're working. They're probably working more than ever right now.
Right.
So yeah, it's a good question.
And this is a related question, I think, to one we just had too. And what is meant by earn $5,000? So they had earned money in the last year, but they didn't take any money out of the business and it was the first year of the business operating.
Right. So hadn't thought of this when the question first came up, but if you're a sole proprietor, so you're a one-man show running your business, and you don't have payroll and you don't have dividends, but you have earned income that you've reported on your tax return, or have earned more than $5,000 in 2020 or calendar 2019. Well, then you've earned income. And so, and the intent of this whole program, I think, was to try to fill the gap for the self-employed and for the people who are waiting for EI. And so I think you're in if you're a sole proprietor who's earned income in the last 12 months or calendar 2019. Greg, what do you think?
I agree with that. I think that the catch is if you're incorporated, not a sole proprietor, but you've incorporated your business. The earnings test appears to be a personal test, which implies you would have had to have paid yourself either a salary or a dividend in order to qualify. It's not a corporate earnings test.
Right. I think that was the question here.
Yeah, at least as it stands now, unless they fix that. And again, they do seem to have some capacity to fix these things, but it looks like it's tied to your personal earnings, not your corporate earnings.
So if you're a 50% shareholder, you've stopped working and being paid in order to save the cash in the company, are you going to be entitled to CERB even though you're not eligible for EI? Well, CERB does not require you to be eligible for EI. So if you are meeting all of the criteria for CERB, work stoppage due to COVID-19, 14 consecutive days, no work, no income, it is not at all tied to whether or not you would qualify for EI benefits. I think we just have to be careful, like Greg said, with the incorporated business when a shareholder has stopped working and stopped being paid. Just be cautious about that. No monkey business allowed. So company with two owners, managers, paid through a combination of wages and non-eligible dividends. They've got renovation jobs that they were working on, not completely stopped, still able to do some work, but it's significantly decreased. Does their work need to stop entirely to be eligible for CERB? That is, not working on any jobs for 14 consecutive days. Well, 2 days ago, the answer was yes. Now the answer might be maybe. 10 hours a week, we don't know what that's going to look like. But if you are not, you have to have stopped working based on the current legislation in order to qualify, and we hope to see positive changes coming soon.
And I might just draw out, there's a reference there to non-eligible dividends. When we said earlier that dividends count towards the CERB income test, it's actually non-eligible dividends that count, which simply put means dividends that are paid out of income that was earned by a small business. So it's a particular type of dividend generated by small business income in the company that applies. So watch the type of dividends you do receive if you're looking to count on dividends to qualify for this. Has to be a non-eligible dividend.
And if you're not sure exactly what kind of dividends you are receiving, pull out one of your T5 slips and take a look. They're in different boxes. So for purposes of applying for CERB, are the owners, managers considered to be self-employed or employees? I don't know. If they're on payroll, they're employees. There's jurisprudence out there over the years that have said that an owner manager could be considered self-employed for some programs like EI, for example. But for CERB, you have to pick a box on the application, but I would base it on whether or not you've been receiving salary.
And you answered one of our questions that came up, so thank you.
Great. If owners continue to receive remuneration from the company while they're not working, I assume they're not eligible for CERB. Is that correct? Well, the answer is yes 2 days ago, and now that might be changing. So it's another stay tuned situation. But again, whether that's 10 hours a week or what, how that's going to be defined, we just don't know yet, unfortunately.
And there is a question related to that, and it states, for those healthcare providers providing emergency care, should they stop completely until there's more clarification about working less than 10 hours a week?
That's a tough spot to be in, whether you can stop working in order to kind of try to qualify for CERB. I mean,
We might have an
don't
answer
know.
to that question, later this week.
Yep.
Yeah, that
I'm
that
a little
could be
reluctant
coming
to stick my neck out on that one
Yeah.
until we know exactly. Again,
Yep.
we're accountants. We like to see the legislation. We like to see more than the Prime Minister on his doorstep telling us what's what.
I mean, I guess put it a different way, they devoted a lot of space on the page in the legislation that did come out to what's going to happen if you receive the CERB in error. And so it sounds like if you receive it in error, you will be required to pay it back over an extended period of time. There's certainly risk in applying for CERB if you don't qualify, if you have continued to work. So you might end up having to pay it back down the road. But, I guess the other thing is that just because the application site launched this week doesn't mean you need to be applying for it right now. So, we can maybe postpone that question until we know more about this 10-hour a week or work a little bit.
Again, keep checking in on our Baker Tilly website. Our national team's been really good about updating changes as they occur.
Sometimes every hour.
Yeah.
So we're going to flip to another topic now, but please keep your questions coming, and we're trying to stay on the call until we get through your questions, if at all possible. Financing options, federal loan programs.
So on this one, the one we'll talk about first is the loan program you may have heard about, where you can get a $40,000 loan, and if you repay it within a certain amount of time, if you repay 75% of it within a certain amount of time, the other 25% of that loan is forgiven, covered by the government. So we'll get to all the detail in the course of these questions. By the way, this is really going to be between you and your bank. Not a lot, perhaps, for your accountant to do on this, but I'll go through the details as we know them. So the first question is, I have cash reserves that will cover overhead costs for a few months. Why would I apply for financing? Well, I think the main reason why you'd apply is because of the forgivable portion of that loan. Again, it's a $40,000 max loan, 25% can be forgiven. So that could be $10,000 of what essentially amounts to a grant from the government to help you out in these tough times. If you don't really need the loan because you're not really affected, certainly it would be admirable if you didn't apply for it, leave the money for the next guy who needs it worse than you, but you still may qualify. The loan is interest-free, at least for a period of time as well, so that's appealing. The other reason why you might want to apply for this is you could use this, assuming that this program gets rolled out quickly, and it sounds like it is, you could use this to bridge your payroll between the time when you need to pay your employees and a couple weeks later when you actually see the subsidy come back from the government. Again, with the wage subsidy program, the catch is you need the cash to pay your employees. Maybe this is where the cash comes from. So that's a good reason why you would apply for this loan.
Great idea.
For the second question, for the $40,000 line of credit, will payments to contractors qualify for the $50,000 payroll threshold? So one of the few things you have to do to qualify for this is have at least $50,000 of payroll last year. That means that you're paying people through payroll and you're giving them a T4. One of the things that you'll need to provide to qualify is your T4 summary from last year. If you're not paying people through payroll but paying them as contractors, you will not have a T4 summary. As of right now, it doesn't look like you'll qualify. And I haven't heard anything about a fix coming for this, but let's keep our fingers crossed. So you might have, if you're paying contractors, a T4A summary instead of a T4 summary. Right now, it doesn't look to me like that gets you into this loan program.
Okay. I do have a question in that regard, and I think you've kind of answered. I have a question in that regard, and I think you've kind of answered it. That they do have to have that threshold, but the question, I guess, is there anything else that they can apply for? They don't seem to be getting any help because of that not reaching that threshold.
Right. So there's some other loan programs as well that aren't tied to, but they might not have a forgiveness aspect to it. And they might not be tied to payroll though. So there's some other loan programs that you might be eligible for as well. One is called, the federally available one is called the Business Credit Availability Program, or the BCAP. There's eligibility of up to 6.25 million per business who's applying for that. And it's going to be done through your bank as well. There's pretty good interest rate on it, 2.8%, and the opportunity to defer your principal repayment on it, but there's no forgivable portion to it. That's the drawback, but that will be available to you also. Again, see your bank about that one. There's some Nova Scotia, if you're a Nova Scotia caller asking that, there's some Nova Scotia grant programs as well that we'll get to at the end here too.
Yep. Perfect.
So the next question is, the amount for wages on our corporate financial statements is around $47,000. Are there any other expenses that can be added to wages to get you over that $50,000 threshold? Well, it depends on what you're showing on your T4 summary from last year. And by the way, it's kind of too late to do anything about it because it's last year's T4 summary, 2019's T4 summary that matters. But you might have other things that end up on your T4 aside from just cash wages, other taxable benefits and things that maybe weren't paid out in cash, but still end up on a T4 slip. So you might just have enough to push you over that $50,000. Automobile benefits being an example. Next question is, who qualifies for the $40,000 CEBA loan? How do you apply? Is it interest free? Is it true you only have to pay $30K? How does it all work? Well, here's how it all works. You qualify if you had between $50,000 and $1 million in total payroll on your T4 in 2019. So it is payroll based. You will apply through your bank. The banks, I think, are saying that they're likely to go live this week on it. I've been getting messages from my own bank about it. Last I checked, it wasn't live yet, but we're told it's coming very soon. You do need to provide your T4 summary in order to apply. That seems to be one of the few financial documents that you actually have to apply or have to provide in order to apply. There's an interest-free period until December 31st, 2022. So what's that? Basically 2.5 years where this loan is interest-free. After that, it converts to a 5% interest rate on the loan. If you manage to pay off the whole loan before that date, December 31st, 2022, if you manage to pay off 75% of the loan before that date, the remaining 25% is forgiven. So that's the free money from the government. The loan program does say it's up to $40,000. It doesn't say it's $40,000, it's up to 40. It's a little unclear to me whose decision it is on what amount up to $40,000 you can qualify for. It sounds to me like if you want $40,000 and you otherwise qualify, you can get $40,000. I thought at first that maybe the amount you get is based on some type of sliding scale based on how large your payroll actually is, but I'm not sure that's the case. So it seems like if you want the 40, you can apply for the full 40, which means that potentially 25% of that, or 10,000, can be forgiven if you repay the other 30,000 before December 31st, 2020. If you don't repay it by December 31st, 2020, the loan gets termed out to a 5-year term, and at a 5% interest rate that will apply after that.
And Greg, just before we jump to the next question, I'm going to jump in with another story, if you'll permit. This particular question, I really loved because it resonates with me that the tone of this question is exactly how all of our small business clients are feeling right now. Who qualifies? How do we apply? Is it interest free? Is it true you only have to pay 30K? How does it all work? We don't know. We're all scared and trying to figure it out. And it's really the biggest reason why we decided to put this presentation on today, because that fear is overwhelming when you're trying to make decisions, keep your business operating, keep your families fed, keep your people paid. Yeah. So it really does just capture the entire, how we're all feeling right now.
Yep, I'd say also, don't feel sheepish about applying for this. All the cool kids are doing it, so to speak. Whether it's based on need or not, it seems like it's available for all businesses to go for it. Is there any reason not to apply? You might have to watch your debt covenants a little bit based on the terms on your existing debt. It is only $40,000 max, so it's not likely enough of a loan on your balance sheet to really impact your lending agreements with your other lenders. You might want to keep that in the back of your mind, however, but I think the message largely is go for it. Then the next question is, I own 3 separate companies. All 3 have wages of greater than 50. All 3 are all 3 entitled to the business account program for the interest-free loan up to $40,000. Doesn't seem to be anything that would restrict you from applying for all 3 companies. Using the term entitled might be a little inaccurate. You still do have to qualify. You still do have to apply, but seemingly all 3 companies would be able to apply.
And it's not tied, Greg, to whether or not you have, as long as you've met the requirement of 50,000 up to 1 million in payroll, there's nothing else restricting you from applying for the multiple companies that we're aware of.
No, I think the banks are asking you to apply with the bank with whom you have your existing relationship and your existing bank accounts. So stick to your normal bank. Aside from that, like I say, go for it.
So Dan's going to jump in with some of the Nova Scotia specific relief programs that we've been hearing about.
Perfect. All right, so there's some different programs, one being the commercial rent deferral program, and that is to be able to defer the rent for up to 3 months, and that is it's an optional program for landlords, but they have been encouraged to defer rents, and there is a clause in there that if landlords do not recover their money because of closures or other inabilities to repay that they can apply and get $5,000 per month, up to $15,000 max per tenant, or $50,000 in total. The sorry, what's the question? The Worker Emergency Bridge Fund. That's a new fund that's come into play, and it's to bridge sort of the federal program with this program. So it's a one-time payment of $1,000, and it's towards those that are self-employed and who don't, and of those who have been laid off and don't qualify for EI. And then the Small Business Impact Grant. That's a grant that's up to 15% of revenues from sales, either from April 2019 or February 2020. And the max that you can apply for here is 5,000, and that's for eligible small businesses. And it's a flexible grant that can be used for any purpose necessary. There's also a payment deferral for government loans to June 30th, 2020, and that would include all those loans from the Farm Loan Board, Fisheries and Aquaculture Loan Board, Jobs Fund, Nova Scotia Business Fund, Municipal Finance Corp, and the Housing Nova Scotia, as well as the Small Business Loan Guarantee Program. There's also a deferral for the registration fees to June 30th, and workers' comp, their premiums, you don't have to pay those till June 30th as well. And one that I wanted to come back to too that Greg mentioned was on the enhancements to the Small Business Loan Guarantee Program. So there's two things that have happened there. One is to make it easier for businesses to access credit up to $500,000. And the second one is a government guarantee for up to the first $100,000 for those businesses that don't normally qualify. And both of those programs are administered by credit unions. So again, reaching out to them would probably be your best bet in order to ensure that you have all the information that you need. Another piece as well is about if you do receive money from the government, you'll receive it now within 5 days instead of the normal 30 days. And there's also some enhancements for restaurants. So delivery orders now, they can actually include alcohol in those orders. And there's also a little nifty tool that you can use, assessment tool, if you don't already have investigated whether or not you can stay open. And the link is on the site here.
Dan, can I jump in there just with something that went through my mind on all of these nice deferrals that are available, whether they be federally or provincially? I know, deferrals all sound great, but do keep in mind that anything deferred is going to have to be paid later. So just a reminder about that.
Perfect. All right. So the impact grant. So yeah, we mentioned that a little bit. So it is 15% of revenues from sales, and the maximum is $5,000, and it can be used for anything. So there was some questions, I guess, coming back to, maybe we'll come back to those. It's more on the wage subsidy. So we'll cover this first.
I do see, just for those of you that are still listening, we do see lots of different questions popping up that are wage subsidy or CERB specific, and some really good questions, and we are going to come back to them. So if you can stay on the line, we'll do our best to get to all of them. And if you can't, we are recording, so we will be publishing. So just a reminder about that. We're not intentionally ignoring your questions, but trying to keep moving, and then we'll come back to as many as we can at the end. So, but we'll switch topics for now over to the EI programs, work sharing or supplemental unemployment benefit program, one of which does have some special measures, COVID-19 measures in place, the work sharing program, one which doesn't, the sub program. Not a ton of questions here at this point, because I think, these are longer term programs that are available that you might want to be thinking about. But just to remind you that you should be looking into them. Now is a good time to be looking into them, because they're longer term programs. Work sharing, for example, can now be used up to 76 weeks, which is a really great way to bring your people back slowly and allow them to continue receiving EI while also having less of a clawback by any hours that you pay them for. I won't get into the details on how the program works. There's lots of information available out there, but a couple of questions. So these programs seem to benefit the employees, but don't really provide any obvious relief to employers. So what is the point in applying for them? So work sharing, for example, it's quite the application process. there's an agreement that you need to enter into. You have work sharing units of employees who agree to share equally among whatever reduced hours are available, not necessarily doing the same job or on the same days. The employer has to apply, and the benefit ends up being that like I said before, the worker continues to receive regular EI benefits and is not having that 50% clawback on any hours that they do work. So it definitely impacts the employees. And so from the employer perspective, the point is that you're keeping your people engaged and fed and happy, and you're able to use them for whatever, at whatever equally shared reduced capacity of work is available. And so it's, a method of perhaps maintaining your skilled employees, having people want to come back to work with you later rather than looking for work elsewhere. Because, let's be honest, if you're trying to survive on EI benefits alone, and while also, checking a box every 2 weeks, every week or two that says you're looking for work, well, you probably are out there looking for work. So it's a really good way to maintain your workforce, and also, take advantage of when they can go back to work, reduced hours that they might be able to work to help you rebuild your business. The sub-program is a different program altogether. No special measures happening here, nothing COVID-19 related, but the supplemental unemployment benefit program is most often historically has been used for maternity leaves. So it's a way of topping up your employees' EI benefits to up to 95% of their normal salaries without any clawback to their EI. It's not tied to working, so you're not topping them up because they're coming in and working for you. If they were working, you'd be paying them. But even if they are working, so partially receiving EI benefits, partially working part-time, let's say, and also under an approved sub-program, topping them up to 95% of their normal salaries. It's definitely going to pave the way for them being available to come back to work when the time comes. So again, most often used for maternity leaves, but also applicable to temporary work shortages. And so if you've got the means to do so, it's not a bad way to hang on to your employees. We don't see how the EI work sharing programs would be possible for our company. No one person can do the other person's job. Doesn't matter. You can build a work sharing unit with as low as 2 people. That's the minimum. And they don't have to be doing each other's job. So I'm just going to give one example. Suppose you have a company that is manufacturing and selling goods, that has administrative staff, office staff, support staff, bookkeeper. They might have warehouse staff, production staff, delivery staff, any number of, let's say, different groups of employees, and maybe they are doing similar jobs like the warehouse staff, or maybe they're not doing similar jobs like the receptionist and the bookkeeper. A work sharing unit is a group of 2 people or more who agree to equally share in a reduced workload from a percentage or hours perspective. So if your bookkeeper and receptionist agree to equally share in a 60% reduction of their time worked, they can qualify. There are lots of other criteria, but I did want to throw that example. Don't write this program off as something that's not going to be of any help to you, especially the work sharing program with the COVID-19 measures that are waiving some of the eligibility requirements, reducing the application time to 10 days from 30, and a program that can run for 76 weeks. These are good options that can help you rebuild and maintain your skilled workforce. So we did want to just give them an honorable mention. Now might not be necessarily the time, but the time to apply is now or soon, because now is when they're relaxing the application requirements and processing these applications as fast as they can. We have actually seen applications to the sub program last week that were approved within 24 hours. The sub-program is the top-up program. It's a lot easier to apply, but literally approved electronically and approved within 24 hours. And so, now is definitely the time to be considering them, even if now is not the time to be using them because of wage subsidy programs and other measures. So just wanted to get an honorable mention out there. We did have some other questions that aren't necessarily related to any of these programs. Dan, you want to take a whack at these ones?
Sure. We are overwhelmed with trying to figure out how to proceed with all these programs and relief measures. In what order should we be doing things to ensure that we don't negatively impact one program by applying for another? So yeah, it does depend. I'll let Lori, maybe, or Greg take that one.
I don't know. I think if it were me, I would say that if you were looking for some kind of, I don't know, order of operations, you'd be considering temporary wage subsidy for a payroll remittance that's coming up on April 15th. You'd be communicating with your bank to get your application in for that $40,000 CEBA loan. You'd be getting your ducks in a row on the revenue side and comparison for the 75% wage subsidy, and you'd be considering applications to any other programs that you qualify for that might help you. Greg, what do you think?
Yeah, I'd agree with that. Nothing more particularly to add to that. I think that's sound advice.
I think I actually had a client and some of our folks at Baker Tilly, Nova Scotia, also say that what you need to do now is do what you do and not spend all of your time trying to figure out all of these measures and programs on your own. There's lots and lots of information out there. Our website is filled with it. Your accountants and advisors are also publishing information and sharing information. And so spending your time trying to become tax experts is not necessarily the best use of your time. Rely on the people who are, spending all day, every day doing that where you can.
Yeah, no, that's a good point. And I'm just going to cover a couple of questions that came in based on some of the Nova Scotia grants. And there isn't a lot of actually information out there. So it's one of those things that, as they pop up, we'll update. But that's really all the information that's out there. No applications or anything of that nature out yet, but it should be forthcoming soon.
A lot of conflicting information out there. Interpretations vary. How do we keep up? Well, yes, there's definitely conflicting information because things are changing all the time. Because government is listening and responding, and I keep in touch with your advisors, and check out the business guidance page that we have on our Baker Tilly Canada website. Talk to your advisors, and we're all struggling with keeping up as well. So feel your pain there for sure. Dan, were there any other questions that we want to come back to before we move on?
There are a couple questions. Actually, it's quite a few, but I'll try to pick a couple here, just being cognizant of time. So one is they're receiving dividends, and majority of the orders have either been canceled or postponed, and the owners are still working in the business. And their question is, there's no new money coming in. It would seem that the CERB would be appropriate for us based on what you're saying. So basically their revenues have kind of dried up at this point.
Except for where they are, they might be considered to be still working. So I guess be careful there until we know more about that potential 10 hours a week or whatever's coming soon.
Okay. And what if they, another question here, what if they retool and start building other products, but they need money for the new machinery? So could they,
go ahead.
So they can get things back up and running, would they claw back on the CERB in that instance?
I'm trying to connect that question to CERB because it sounds like it might be a bit financing related and a bit CERB related. So like a wage subsidy, for example, isn't going to cover buying new machinery. That money's intended to go into the pockets of the wage earners. And CERB is tied to the individual who is not working and has had 14 consecutive days off due to COVID-19. And so trying to retool or pivot and do new things with your business so that you can start generating revenues. Well, clearly you'd be, or maybe not quite clearly, but it sounds like you're probably experiencing that 30% decline in business and may qualify for the wage subsidy. But more importantly, if you're going to retool and look at buying new capital equipment, then the question is, how are you going to get the financing to do that? And I think some of the loan programs and subsidies that we've talked about might be available to you. Not a lot that's capital specific. I think, one of the Nova Scotia ones, you can use it for anything, but some of them are tied to operational, none that are necessarily excluding capital purchases, but don't seem to be 100% intended for it. I don't know, Greg, what do you think there?
Yeah, I'd agree with that. And I mean, certainly you'd be looking at the financing options such as the Business Credit Availability Program, which interestingly isn't really tied to helping people attain funding to retool and help out with the crisis. It's more intended just to help bridge cash flow crunches, but I'm sure you fit that bill as well. And again, that's where there's an eligibility of up to 6.25 million of low interest funding in order to use to reinvest like that. So I think that would be a good program to explore.
I'm going to jump in and grab one of the questions that I saw floating through the feed. That I've also been asked this question just yesterday, as a matter of fact. So, what if you are an individual who has 2 part-time jobs and has been laid off due to closure, COVID-19 related, from one of those jobs, but not the other? Are you still going to qualify for CERB, the $2,000 a month? And the answer is probably not, because the criteria for CERB are tied to, at least for now, until things change. Maybe they're going to change in a positive way, but as of yesterday or the day before yesterday, the answer would have been probably not, because if you're still working, even part-time, then you were out as of 2 days ago and wouldn't have qualified. CERB is not tied to your employer, it's tied to you as a person. So now the good news on that answer that differs today from 2 days ago is that Trudeau's announcement yesterday makes it sound like maybe there's a way that that's going to work, and stay tuned. We hope that that will be generous and that will be the case. We did want to just make a few brief comments and answer a couple of questions on accounting systems, cloud-based accounting, sharing data. How are we going to do our work and our record keeping in this environment where we're all working from home and don't have access necessarily to all of the things that we need? Dan, I'm going to let you just go ahead and jump in, because this is definitely your area of expertise and what you live every single day. So you go ahead with this one.
Yeah, sure. So one of the questions is, if they've closed their business and they can't necessarily get in and get their records, what do they do in that instance? And is there any relief programs? And I would say, coming back to Lori's point, it's a safety thing. So if it's not safe to do so, I wouldn't do it. And if you have prior records they can use as an example to file your HST from the prior year, I would probably do that. Obviously, if it's possible, and if you're on sort of more of a desktop type of an accounting system, if there's a way that you can move it to a cloud-based accounting system, that might be the best solution for you. But again, that's not always possible. And the question, how you should deliver year-end and personal tax information. So at our offices, we've actually moved, as much as possible, I would say, to paperless office. So we try to make sure that folks, where they can, scan things and send it in that way, so that there's no transfer of paper information, and avoiding or keeping that safety. Safest way to send information to your accountant. So we have solution that we use so that it's encrypted, and I would say that's the best way to do it.
Famous words from our IT folks at Baker Tilly: email is inherently risky. So I might have got the words wrong if you're listening, but basically beware of just sending stuff around via email, whether that's PDFs or Word documents, whatever the case may be. They're definitely susceptible to being hacked. And so find a secure way to encrypt your information and share it that way, whether that's through something like ShareFile or another secure system.
Yep.
We wanted to include a few useful links for you, just some that we've mentioned before, but also a couple that we haven't specifically provided the links for Nova Scotia provincial relief measures, the emergency wage subsidy backgrounder, the CERB fact sheet, which has been updated as of yesterday, and our own Baker Tilly COVID-19 business guidance page, which is being updated daily as fast as we can, as soon as new information comes out. And I think from there we'll do a couple of closing remarks before we sign off. So I'll let you go ahead, Dan. Anything you want to say to wrap things up?
Well, I think just keep an eye out for any updates to information. There seems to be a lot out there, but I think there's some really good programs potentially for folks, and hopefully they will align with your specific business needs. And I would say keep a close eye out on any updates we may have, but there's also all kinds of good information that I see on feeds on LinkedIn. So keep an eye out there, and obviously going to government pages to look for updates there as well.
I would add also, have a look at that last link to the Baker Tilly Canada COVID-19 business guidance. Not to brag too much about it, but it's a really good document with most of the information that you could possibly want all in one place, and organized very well. And in fact, it's been circulating around the country, so it's really been well received and taken off. And it's certainly one that I rely on a lot. We do update it whenever something changes. We update it. So I would go to the link as opposed to printing off what you see now and using that as your resource, because that will be out of date before you know it. Whereas the online version will be made current as quickly as possible as new developments come out.
Yeah, I echo everything that you and Dan have said there. Thanks very much for joining us. Appreciate you taking the time. Appreciate you letting us go over to try to address as many questions as possible. You know, keep an eye out on all of these things as they progress, and you know, strategize and pivot where you can on your business. I think I'll just leave it at that, and maybe remind you that, of course, we have recorded. We will be posting the recording so you can access it publicly. You'll see links to that on our website, social media, other. If you signed up to get a recording, you'll get it delivered straight to you. And I guess I'll just echo my favorite new slogan here at our house, which is "Stay the Blazes home." Thanks for joining us. And with that, we're going to end the live presentation.